How will Trump's second term reshape the U.S. economy, challenge China, and impact Europe? Could his aggressive trade policies and tax cuts spark inflation or drive growth? This episode is a bit special as we dive into what the new Trump presidency means for the U.S., China, and the EU. And as always, we'll analyze yesterday's stock market performance, sector rotation, and commodities. Let's jump in. Donald Trump will be back in the White House, and his victory could shake up the global economic landscape in a big way. First up, let's talk about taxes. Trump has promised major tax cuts, proposing to lower the corporate tax rate from 21% to 15% and aiming to make his 2017 tax cuts permanent. Supporters argue these cuts could spur economic growth and job creation. But many economists warn that without new revenue sources, these tax cuts could significantly increase the deficit. According to estimates, Trump's plans might add anywhere from $3 trillion to $7.5 trillion to the deficit over a decade. On trade, Trump plans to reintroduce sweeping tariffs. While these tariffs are aimed at boosting American manufacturing, they also risk sparking trade wars that could hurt global supply chains and raise consumer prices. The Tax Foundation estimates that a 10% tariff could shrink the stock market by the same percentage. The U.S. economy is already operating at near full employment, so it's difficult to believe there's a significant margin to create more industries and jobs, especially while also maintaining a very restrictive migration policy. Speaking of immigration, Trump has proposed a massive deportation program, which he claims could lower housing costs and increase wages. But critics argue this move could strain industries heavily reliant on low-income immigrant labor, particularly agriculture and construction, leading to labor shortages and, ironically, higher prices for goods and services due to scarcity. That's also without considering the massive cost of putting mass deportations into practice. For the American economy, Trump's policies could create a short-term boost, but may also bring problems in the longer term, especially for inflation and the deficit. Trump's campaign took a hard stance on China, threatening tariffs as high as 60% on Chinese imports. If implemented, this would be a major hit for China's economy, which is already grappling with a property market crisis, rising debt, and weak domestic demand. The property sector, previously a backbone of economic growth, is now struggling, limiting China's options to respond to external shocks. These very high tariffs would also be very detrimental to U.S. producers and consumers. China's overall debt levels, including government, corporate, and household debt, are now at a staggering 300% of GDP, making it harder for Beijing to weather Trump's tariff threats without taking on even more debt. Adding to the complexity, deflationary pressures are intensifying due to oversupply in manufacturing, putting more strain on the economy. To counter potential headwinds, as I reported a few episodes ago, China was considering a $1.4 trillion fiscal package aimed at stabilizing its economy, but this amount could be expanded if Trump won, so we'll likely get an update about this in the coming days. But will the fiscal stimulus be enough to offset the impact of Trump's tariffs? Donald Trump's election win is also sending shockwaves across Europe, with leaders preparing for what could be 4 very challenging years. His America First protectionist policies are back, and that likely means new tariffs on European goods. His 10% or 20% tariff on imports would hurt Europe's economy, especially if he follows through on higher tariffs for cars and other key exports. EU leaders are already planning their response, and French President Emmanuel Macron and German Chancellor Olaf Scholz are calling for a united European front. On the energy front, Trump's plans to boost oil and gas production could impact Europe's green energy goals. His support for fossil fuels and plans to dismantle climate policies might undermine the EU's push for global climate leadership. There's even concern Trump might withdraw the U.S. from the Paris Agreement again. Defense is another critical area. Trump's skepticism of NATO and past threats to reduce U.S. support have European leaders worried about future security commitments. With Russia's ongoing war in Ukraine, the EU will have to increase its own defense spending and reduce reliance on American military support. Voices urging the creation of a European Union army have resurfaced. All these factors are weighing heavily on European markets. The euro fell about 2% against the dollar after Trump's win, and many investors are concerned about the potential economic impact. This election outcome will likely prompt discussions about the future of the EU and making it less dependent on a partner that has proven to be unreliable, like the US. US stocks surged following Donald Trump's election victory, pushing the major indices to new highs. The S&P 500 rose 2.5% to 5,929, while the Nasdaq gained almost 3% to reach 18,983. The Dow Jones jumped over 3.5%, adding about 1,500 points to close at an all-time high of 43,730. It was a strong day across the board, with small caps, the Russell 2000, soaring 5.84%. I was very happy because I owned a Russell ETF. This was the best day for the Russell in 2 years. Remember from yesterday's episode that I talked about Morningstar pointing out that small caps are undervalued and trading at a 14% discount, so they still have plenty of room to grow. The reaction extended beyond stocks. U.S. Treasury yields rose sharply, with the 10-year yield hitting 4.437%, up more than 3.5% daily. Trump voters may not realize this, but smart institutions and investors know that Trump's policies could easily boost inflation and lead to sustained higher interest rates. Bitcoin also rallied, reaching a record high above $76,000, as crypto investors expect that a Trump administration will adopt crypto-friendly policies. The dollar index climbed as well, with analysts expecting that Trump's tax cuts, spending plans, and potentially higher tariffs could fuel a stronger dollar in the near term. In individual moves, Tesla jumped more than 14%, as Musk has been a major supporter of Trump. Again, I said this yesterday, but it's worth noting that historically, the direction the S&P 500 takes the day after a U.S. election tends to set the tone for the following 2 weeks. That has held true 100% of the time since the 1996 election. Since this session was very green, we could be in for a solid start to November, a month that's traditionally the best in election years. Last session was the best post-electoral session ever recorded in the history of the S&P 500, so maybe this is a hint that we will have a very green November and possibly December. The Fear and Greed Index sits today at 59, landing firmly in the greed zone. That's a significant jump from yesterday's neutral 43, which is unsurprising given how positive yesterday was for stocks. This increase reflects rising optimism among investors now that political uncertainty is gone, and they expect very business-friendly policies under Trump. Looking at yesterday's sector rotation, financials took the spotlight, with regional banks soaring an impressive 13.41%. This gain reflects optimism over anticipated deregulation and tax cuts, especially benefiting domestic-focused banks. Metals and mining also saw strong performance, jumping 8.07%. However, not all sectors shared in the gains. Clean energy faced significant headwinds, with the solar sector plunging 10.86%, marking its worst day since March 2020. This sharp drop aligns with Trump's pro-oil, pro-natural gas approach and his skepticism on climate change, which may slow investments in renewables. Clean energy funds also slid 4.45%, indicating investor concerns about reduced support for green initiatives. Home builders and real estate also experienced losses, likely due to Trump's crackdown on illegal immigration, which could affect the construction sector. When it comes to commodities, crude oil had a volatile day, dipping by 0.42% and now trading at $71.34. There's a risk of a bearish continuation, and analysts are already speculating that oil might fall below $60. Trump's expected sanctions on Iran are lending some support, but under his mandate, oil production will likely increase, pushing prices lower. Natural gas jumped 2.88% on anticipation of deregulation, though it's since pulled back slightly. Finally, gold plummeted 2.67% to $2,666, its worst day since June. Rising bond yields and a strengthening dollar are reducing gold's appeal as a safe haven asset. The main event for today is the Fed's interest rate decision, which comes right after Trump's election win. Markets have almost certainly priced in a 0.25-point cut from 5% to 4.75%. We'll also see earnings from Airbnb, Moderna, and Cloudflare. Please subscribe and hit the notification bell to stay tuned for daily updates. If you've made it this far, thank you, and see you tomorrow.